Last month, I generated $200 a month in passive income, and I did that two main ways. Check out the screen here. We have $50 a month coming, 48 to be exact, but $50 a month coming from dividends in my dividend growth portfolio. And the other $161 came from selling covered calls in my Robinhood growth portfolio account. Now, how did I do this? We're gonna go over what is a covered call, what strategy I'm looking to implement, because don't worry guys, I still am gonna be a dividend growth investor. I'm not gonna be selling out of my portfolio whatsoever. I'm gonna be implementing both of these strategies at once, and we're gonna be comparing the performance of the two. And we're gonna go over the criteria that I look for in owning growth stocks and selling covered calls against them, and also selling puts on some stocks as well. So thank you guys for tuning in. If you haven't got signed up with M1 Finance, they're having the biggest promotion ever. Instead of the normal amount of $10 for getting referred, they're offering $50 per referral. 50. That's so much money, so go ahead and check that out if you haven't already, as well as lots of other things in the description. But let's go ahead and look at my Robinhood portfolio, which currently sits a little bit under $20,000. Friday was a big red day for all small cap stocks, including the two that I own, which is Corsair Gaming and Tattooed Chef. I currently own 700 shares of Tattooed Chef, and then I also own 200 shares of Corsair Gaming. Now, like I said last month, I generated about $161 in covered call income from my Tattooed Chef shares. Now that shows up whether or not the stock goes up, the stock goes down, and basically what a covered call is that if you own a stock here, so right here where my hand is, here, I'll set it like this. So right here, this is where you own the stock, okay? So if you own the stock at say $17 a share, okay, which is what I own Tattooed Chef at, and I make an agreement to sell the stock next month at $30 a share. Well, that will pay me a premium, offering an investor a chance to get more upside momentum on the stock. Now, what this means is that if it gets to $30 a share by next month, then I will have to sell my shares. Now, in this scenario, I don't really care, because in that case, I'll be selling my shares for over a 50% gain in the matter of 4 short months. That is a huge uproar, and since I'm targeting just 15% annually, that is already way above target, and in that case, I wouldn't really care. Plus, I would receive my 1% in monthly premium. Now, let's jump over to this list that I made, and this shows the criteria for the 4 main bullet points that I look for and whether or not I want to buy these shares of a stock. Keep in mind that I need to buy in multiples of 100. In order to sell covered calls, you have to own at least 100 shares of a stock, or if you're selling puts, you have to be willing to buy 100 shares of a stock. And so it gets very expensive to do this. It is not easy to do with the small account, like $2,000 or $3,000. But once you start getting up to where I'm at around the $20,000 range, it starts becoming an opportunity to buy these stocks in different categories, different industries, and these are the 4 bullet points that I look for when buying these stocks. Now, these are also listed in order of importance. So the number 1 is the most important, the number 4 is the least important, but number 1 we have, which is pretty simple, but it has to be a stock that I want to own. I'm not going to be selling covered calls or cash secured puts on companies that I don't want to own. I'm not trading meme stocks like AMC or GameStop or anything like that. Corsair Gaming and Tattooed Chef are 2 stocks that I want to own. I want to own these companies, and I believe that they have big return opportunities over the next 5 years. Now, going back to returns over the next 5 years, that goes hand in hand with bullet point number 2. Number 2 says that I want to see an opportunity for what I believe will make the stock go up at least 15% a year annually, compounded, okay? And basically what that means, if you take $100 invested and you multiply it times 1.15 and you do that 5 times in a row, as in 15% a year, year after year after year after year after year, 5 years in a row. That is right at about a double up. And so I basically believe on all the companies that I own in my growth portfolio that they will double up in the next 5 years. If I don't believe that, then I'm probably not going to own them. And I believe that Corsair Gaming, since I bought it at an average of $31.34, I believe that by 2026, it will be at least a $62 stock, meaning that I will double up my money, and regardless of whether or not I hold it the next 5 years, I definitely believe the short-term downwards price movement will go away very soon. I believe that 1 year from now, we'll probably be up significantly more than 15%. I mean, this stock has been up, it's been down, it's been all over the place. And do I believe that, 15% upwards move from where I'm at now is about, if I'm doing that in my head, it's about $36. Do I believe that Corsair Gaming will be over $36 a share by next year? Absolutely I do. And the better part is that I'm selling that 1% premium. This is a look at what I'm selling right now. I just bought the stock, by the way. I've only owned the stock for, I believe, 5 days, including the weekend that I'm filming this. So I've only owned the stock for about 5 days. It hasn't had a lot of time to pan out, whether it's up or down. It just moved a couple percent. But I immediately sold covered calls against my position. I put an agreement to sell the stock at $40 a share when I bought it at $31.34. Now, once again, I target at least 1% monthly in covered call premium. And so in this scenario, I bought 200 shares of the stock at $31.34. That's a little over $6,000 invested. So what's 1% of $6,000? 1% of $6,000 is about $60. So I want to get at least $60, if not more, in monthly premium from selling these covered calls. Now I was able to generate about $120 so far, and it's still decaying by the day. Right now it's already down 50% in the matter of 4 or 5 days, counting the weekend. But I am looking at getting $60 roughly, and so far the first month we are on target to do that. And that's what's great about covered calls, is that it doesn't matter if you're up, it doesn't matter if you're down on your position. As long as you're somewhere close to where you bought in at, or if you're way up on your position, it's very easy to get that 1% monthly. The only way that I really lose money on this position, if it goes down, it tanks, and then it never comes back. But that's what I'm doing with Corsair Gaming. My tattooed chef that I'm showing on right now, last month I generated $161, but those calls just expired just yesterday, and so I'm looking at selling more calls this week. I'll keep you guys updated on that, and I should be targeting, since I have about roughly, what do I have invested in the stock now? I believe it's around $12,000. I want to get at least about $120, $140 a month or so in monthly premium, and I think we should be able to beat that. Now I'm going to number 3 on the list, and a lot of you guys aren't familiar with this, so look up the term if you're confused, but I want to have a stock that has high implied volatility, or for short, IV, implied volatility. Now what that means is that the stock is volatile. Volatility means rapid movement up, rapid movement down. This is not what you see in a lot of boring dividend stocks like Coca-Cola, which I own, or Pepsi, or Johnson & Johnson. But these are all over the place in high growth stocks, such as the 2 that I own, a Corsair Gaming and a Tattooed Chef. Now I want to try to at least look at 40% or more. That's about what I need to do my strategy efficiently. Anything higher than that is better. 40, 50, 60, 70% is better, but 40% is at least about the minimum what I'm looking for. And then last but not least, this is still important. It's not an absolute requirement, but since I only have a $20,000 portfolio and I'm buying in multiples of 100 shares, I can't afford to do this with a $200 stock, a $250 stock, or really even $150. For me, $100 or less is really optimal. That's really what I'm searching for. And by the way, my 700 shares of Tattooed Chef, I am looking at selling once it hits a specific price. For part of my shares, probably 300 or 400 shares, I will get a bit more aggressive on selling my calls because I'm already up almost 20% of my position. And so far, I think that it has experienced a lot of growth already because I picked it up at an incredible price, and I should be able to sell part of those shares and invest it into one of these 2 stocks. You can see here on the screen that it says I currently own 700 shares of Tattooed Chef and 200 shares of Corsair Gaming at those prices that I mentioned below, $17.21 and $31.34. But I'm looking at selling about 300-ish shares or so of Tattooed Chef to hopefully buy Chewy stock. Now the same thing with Corsair Gaming. I will be making a video describing every reason why I believe it will be a double up in the next 5 years. And the same thing for Chewy stock. I think there's a lot of things that people are missing, and they're discounting the stock incorrectly, in my opinion. I think trying to buy it at 75, that's my optimal price. I want to try to buy at 75 or lower if possible. If I'm able to do that, I believe that Chewy stock will be 150 or more by the year 2026, and I will stand by that for sure. Now, like I said, this definitely varies, and trying to target this performance of 1% a month is not easy. It is not easy at all to get this 1% a month, and it is very realistic that I could get these shares called away. Once again, in the same thing with Tattooed Chef, I'd be selling out for a massive gain in just a couple of months, way above my target of 15%. I don't want to lose those shares, but if it happens, it happens. There's always other stocks to invest in. Right now, the 4 that I mentioned, the 2 that I own, and the 2 that I'm looking at, are really the 4 that fit that category. A very small list of stocks fit into this category. It's very hard to find stocks that A, have a stock that I want to own, B, have an opportunity to double their share price in the next 5 years that I believe will double up by 2026, C, having high implied volatility, or high IV as they say, Data gang. And then D, they also have to be a stock that is preferably under $100 a share, because under that gets really difficult for me. But once they fit those 4 categories, it is really hard again to get that target percentage of 1% a month. I am not saying that I will be able to do it consistently. I may have way higher some months, way lower some months, depending on where the share price and what the company does and how it performs, and just where I want to move my portfolio in general. But if that's the case, if I'm able to meet that target, which I think I will be able to, I'll be able to do 2 things. One, I believe I will be able to have outsized performance way further than my dividend portfolio. I love the dividend growth portfolio. I believe that it is best for the psychology behind investing, especially for beginners. If you're receiving dividends, it is so motivating to receive that monthly dividend income. And the same thing for these covered calls. I love cash flow and owning stocks. With growth stocks, you don't get that. You don't receive dividend payments. So selling covered calls and cash secured puts against your position is the only way to really receive cash flow from these positions. But if I'm able to achieve that target of doing both, which is A, receive 1% in monthly premium, and B, receive at least a 15% annual return from the actual underlying stock price going up, then I will receive very outsized returns. I'm not saying I'll be able to do this. It is not easy at all. But if I'm able to do so, I will get some massive returns from this portfolio. And once again, this is not easy to do, so make sure you do your homework. Don't just watch my video and go out and do this, but go ahead and get some experience trying this if you're wanting to do so. It's not financial advice, but it's what I am doing. And my goal on this channel is not to tell you guys what you should do with your money or what you should be doing with your stocks. My goal is just to show you what I'm doing and do with that as you will. You might think that I'm an idiot for doing this. You might not love what I'm doing at all. You might think I'm an absolute dummy and I'm going to lose all my money. And some of you love it and think I'm a genius. So do whatever you will with this. You can follow on with me or not. But this is what I'm doing and this is how I'm implementing that strategy. Like I mentioned earlier, if you didn't get signed up with M1 Finance, $50 for getting signed up right now. Their largest promotion ever. And they're also hinting at some big promotion coming out over the next couple of weeks. So stay tuned for that. I'm really excited to see what M1 Finance comes out with, which is my main dividend strategy, my dividend growth portfolio. But thank you guys so much for watching. I hope you found this helpful, and I'll catch you guys next time.